In this chapter, we're going to look at the costs of production. Look for the answers to these questions. What is a production function and what is marginal product and how are they related? What are the various costs? How are they related to each other and to output? How are costs different in the short run versus the long run? And what are economies of scale? We assume that the firm's goal is to maximize profit. Profit equals total revenue, which is the quantity that a firm sells times the price, minus the total cost, the market value of all the inputs that a firm uses in production. Cost can be explicit versus implicit. The cost of something is what you give up to get it. An explicit cost requires an outlay of money. Examples, what you pay your workers. Implicit costs do not require a cash outlay. So an example is the opportunity cost. The opportunity cost of the owner's time. What would they be doing if they were not spending their time running this business? Total cost equals explicit plus implicit costs. Let's look at an example. You need $100,000 to start your business and the interest rate is 5%. In case 1, you borrow $100,000. The explicit cost is $5,000 interest on the loan. In case 2, you're going to use $40,000 of your own savings and you're going to borrow the other $60,000. The explicit cost is the $3,000 times the 5% interest on the loan, and the implicit cost is the $2,000 times the 5% foregone interest you could have earned on your $40,000. In both cases, your total costs, your explicit plus your implicit costs, are $5,000. What's the difference between economic profit and accounting profit? Accounting profit looks at total revenue minus total explicit costs. Economic profit looks at total revenue minus your total costs. So it includes both explicit and implicit costs. Accounting profit ignores implicit costs, so it will be higher than economic profit. In this active learning exercise, you're going to look at economic profit versus accounting profit. The equilibrium rent on office space has just increased by $500 a month. What will the effects on accounting profit and economic profit be if you rent your own space or if you own your own office space?